Welcome to The Explainer. Today, we're going to dig into the real story of a company's health. The story that you don't always get from just looking at profits. We're going to break down a cash flow statement, and we'll use some real world numbers to see what the money is actually telling us. So let's kick things off with a really important idea. You've probably heard that profit can be, well, a bit of an opinion. Accounting rules can get creative. But cash, the actual dollars moving in and out of the bank, that is a hard fact. And it tells you the true story about a company's health and its game plan. So, how do we read this story? Well, that's where the cash flow statement comes in. It's awesome because it basically takes all that money movement and sorts it into 3 simple chapters: where the cash comes from, where it's going, and how they're funding the whole thing. Let's take a look. All right, first up, and honestly the most important part, cash flow from operations. This is the company's engine room. It's the cash they make from their main gig, selling their products or services. Is that engine humming along smoothly, or is it sputtering? This is where we find out. So if we look at the numbers from a company like Colgate, a story starts to jump right off the page. See that pattern? The cash from their core business isn't just in the black, it's growing. And not just by a little bit, from $2.1 billion to almost $7 billion in just 4 years. That's a fantastic sign that the business is really, really strong. And what's really wild is how fast it's speeding up. I mean, that jump in 2021 to nearly $7 billion, that shows you their main business isn't just healthy, it is absolutely firing on all cylinders. This is the kind of powerful cash-making machine that gets people really excited. Okay, so what are they doing with all that cash? That brings us to Chapter 2, Cash Flow from Investing. If operations tells us about right now, investing tells us about the future. This is where we see how the company is spending money today to hopefully make even more money tomorrow. Now, when you look at this section, you're going to see a lot of negative numbers. That just means cash is leaving the company. But don't panic. This isn't a bad thing. This is money being put to work, spent on things like new factories or better equipment. They're basically planting trees that will bear fruit for years to come. So you see all this cash flying out the door year after year, and you might be thinking, uh-oh, is this a bad sign? Are they in some kind of trouble? It's a fair question for sure. And the answer is no, quite the opposite. This is actually a sign of a confident, healthy company. They're taking the cash they're making now and betting on themselves for the future. You know the saying, you've got to spend money to make money? Well, this is exactly what that looks like. And check this out, it's a perfect example of that strategy in action. Companies will also park their extra cash in short-term investments. The goal is super simple. Put some money out, get more money back. So maybe they invest $21 billion one year, and when it comes back, it's turned into $23 billion. It's just another way to make their cash work harder for them. And that brings us to the third and final piece of our puzzle, cash flow from financing. This part of the story is all about the fuel. It tells us how a company gets the money it needs to run and grow, and also how it gives money back to its owners. Think of financing as a two-way street. Cash comes in when they, say, take out a new loan. A lot of companies did this in 2020 just to be safe during the pandemic. And cash goes out when they pay back loans or, and this is a big one, when they pay dividends to their shareholders, which is a way of sharing the profits. Okay, so we've looked at the engine room, the blueprints for the future, and the fuel tank. What happens when we put it all together? What's the final verdict? What's the complete story for the year? This is the bottom line. When you add up all 3 sections, you get the net change in cash for the year. And yeah, you'll see some years it goes down a little, and some years it goes up. But here's the real takeaway. Their cash engine from operations is so powerful, it can pay for huge investments in the future and reward its shareholders, all while keeping the company's bank account looking pretty healthy. So the game plan you can use for pretty much any company is this simple 4-step process. 1, check the core business. Is it a cash machine? 2, see if they're investing that cash wisely for the future. 3, understand where their funding is coming from and going to. And 4, put it all together to see the whole story. So next time you see a headline about some company's record profits, you'll know to ask the real question. Yeah, but show me the cash. You now have the tools to look past the headlines and see what's really going on under the hood. Thanks for joining The Explainer.